I think that the first issue is the currency is being devalued everywhere in the world. It's being devalued at the rate of 20% or more, at least in the US. Every other currency is pegged to the US currency. If the US currency actually just collapsed 37%, which is what the S&P index is pointing to, that means the euro collapsed 37% against scarce assets. That means the Chinese yuan collapsed, the CNY collapsed 37% because it's pegged. That means that the Saudi currency, the Emirati currency, the Swiss currency, the Singaporean currency, every first world pegged currency collapsed 37% against scarce assets. Second and developing world collapsed 20% more. And the third tranche, the weak currencies, Zimbabwe, Venezuela, even Argentina, Syria, Iran, Lebanon, they're collapsing 80% against scarce assets. Now you got to ask the question, what if I don't want to own 100% Bitcoin? But by the way, it's like people think it's risky to own Bitcoin because it's volatile. That's basically myopic thinking, because what you're doing is you're putting blinders on and you're fixating upon the volatility of Bitcoin instead of looking out. How much did the volatility of Bitcoin hurt you if you own Bitcoin in Lebanon? Because they devalued the currency 90% and they seized and froze all the foreign assets. So you lost 90 to 100% of everything in 12 months. Okay, so the volatility of Bitcoin, which is up 280% in US dollars and going back and forth, that volatility is second or third order. If the airplane is depressurizing, you're worried about the hygienic standards of the oxygen mask. Who gives a crap? You're going to be dead in 60 seconds. When the ship is sinking and you're worried about whether you got the best seat on the lifeboat or try to figure out whether you wanted this one or that one, you're going to be dead in 2 hours. If you have if you're Jewish in Germany in 1932, the only answer is you needed to leave. That's the only answer. There was no other answer. It was just going to get progressively worse. And you're screwing around debating whether you should take a 25% haircut to sell you. Everybody, if you read the history, first they sold their property for a 40% discount, then a 50%, then a 60%, then an 80%, then a 90%, then a 95%. Then they lost everything. Then they had to pay a ransom to get out. And if you were lucky and you paid, a huge amount of money, that came from somewhere else, you might have got out. That's what happens when you have a collapse in a socioeconomic system. The summary is there's no diversification strategy that works in Venezuela, Benjamin. None. There's nothing that works other than you got to go orthogonal to the monetary system. Let's say in the U.S. we buy the notion that the dollar is collapsing 20 to 35% against scarce assets. And we can debate what it is, but it's at least the M2 money supply is 21% or something. The S&P is telling you that the money supply is, that the currency is collapsing 37%. That's what it's telling you based on history. If you don't want to own all Bitcoin, then my advice would be buy a bunch of residential real estate you're going to live in the rest of your life. Buy a beach house. So I buy a house I want to own the rest of my life because the Federal Reserve can't print that away. They're not going to take 37% of my house away each year. Then I buy scarce assets. You could buy collectibles. You could say, what is a good investment? Something that a wealthy person will want to buy from you in 10 years. Buy a franchise trophy asset. If you have an asset like maybe the Jets, maybe a sports team, if you have an asset which you think is going to hold its value and appeal for the affluent for a decade, regardless of what a politician might do, then you might want to hold that. Do you want to hold a building in New York? Well, your property rights can be impaired. The Supreme Court this week just ruled against eviction for non-paying tenants. So if you were holding an apartment building thinking that was an asset, that was impaired during the lockdown and you can't move it. I don't know, maybe. I wouldn't own cash. I wouldn't own a bond. Bonds have a negative 20% real yield. Now, what about gold? I wouldn't own gold. Gold is if we look at the results, NASDAQ is up 43, 44%. And if you bought long dated bonds, 10 to 30-year treasuries, you're down 12%, which totally makes sense, because it'd be stupid to buy a 30-year sovereign debt that was yielding 1.2% interest, which is where you were 12 months ago. Should you buy Picasso's, baseball cards, comic books? I mean, maybe buy a portfolio of rare art, because wealthy people will probably want to buy the rare art off of you. What worked well? Single family housing's up 25%, according to headlines in the Wall Street Journal last week. 25%. Hampton's houses are up 50%. Luxury real estate, things that are highly desirable that people with money want, right? You want to buy. You would say Ethereum's up even more. Yeah, I mean, there's certainly small, you probably Tesla, meme stocks. You can find other things out the risk curve that have also performed well. So, I mean, you could look at those. My issue here is there's two existential macroeconomic questions you got to ask yourself. One, will a political activity impair the value of your capital? For example, will Amazon get unionized? Will Apple or Google get broken up? Will there be an antitrust action? Will it be positive and negative? Will China ban Apple from manufacturing iPhones? Will there be a tariff? Will your property get impaired by a tariff, a tax, or a regulation? Because the most valuable companies on earth, in theory, should be the water utilities and the power companies, electricity and water. But they're not, because they're regulated as monopolies. But at the end of the day, right, everybody in New York would be dead within 48 hours if I turned off electricity in New York City. So if I really, and I could kill you with the water supply faster. So if it was really as simple as providing a utilitarian value, then the utilities would be much more valuable. But what happens is eventually the politicians regulate the utilities, and then the profit leaves those businesses. So the question is, if I'm holding an equity, will it be impaired by a political act? I can tax away your property, right? You can't move. $1 billion building in New York isn't moving, whereas $1 billion of Bitcoin can move. If the state of California passes a property wealth tax that seizes 10% of all your property in California, and it's a building, good luck with that. Can you sell that to a billionaire in Beijing or a billionaire in Tokyo? Not likely. Can you move it to Tokyo? Not likely. Now, here's the thing about Bitcoin. If I own $1 billion of Bitcoin and California taxes 10% of it, I can move to Wyoming. If the United States government taxes it, and I can't, let's say the worst case, the United States government taxes it, I'm a U.S. citizen, I could move out of the country, but they still want to tax U.S. citizens. I can sell it to someone who's a Monaco resident, and they can take possession of it in Monaco, subject to Monaco tax laws. And so the value of the property is less impaired because I can transfer it to someone in a different political jurisdiction. And I don't have to worry about the mayor of New York passing an anti-eviction law on me that says is the mayor of New York going to say you can't generate yield on your Bitcoin? Because he said that to people that owned apartment buildings. He said you can't generate yield on your apartment building.